Good morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Today is Friday, and it's the 17th of December. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. Okay, and here is the market commentaries disclaimer and our references and market scope and CNBC. Let's just go through to CNBC first. And all right, so the headline: European stocks set to pull back as Omicron concerns persist. European markets set to open lower as concerns about the spread of Omicron COVID-19 variant and the inflation outlook persist. European stocks coming off a strong day as investors reacted positively to central bank policy decisions. The Fed on Wednesday announced that it would be aggressive in tapering and see several rate hikes in 2022. This one was a bit of a surprise. The Bank of England followed suit by hiking interest for the first time since the start of the pandemic, citing a strong labour market and the need to return inflation towards its 2% target. November's reading came in at 10-year highs at 5.1% annually. And why I say it's a surprise is that the previous meeting, I thought that they were going to hike. This meeting, I thought, well, they're going to wait till Feb because that's when the press conference is. And no, they went ahead with the rate hikes. So it was a surprise in the sense that I wasn't expecting it at the meeting yesterday. Not a surprise because it was coming sooner or later. And they chose sooner. The European Central Bank struck a more dovish tone, further cutting its pandemic-era bond buying program by vowing to stay accommodative through 2022 and beyond. I don't think that's the most well-written paragraph I've ever read. But, so they've cut bond buying, okay, but they are still bullish. I think they are still dovish because they are vowing to stay accommodative. All right, let's just. However, with inflation running at more than double target in the US, Eurozone, and the UK, concerns are lingering as to whether it can be brought under control. And yeah, so that's the key question. You know, can they bring inflation under control? And we shall see. Meanwhile, the Omicron variant is spreading at an alarming rate, with countries across Europe implementing containment measures in a bid to avoid a tsunami of cases. The UK reported nearly 90,000 cases in a single day on Thursday, but double deaths remain a big one, but daily deaths remain relatively stable. Markets in Asia Pacific were mostly lower overnight, with stocks in Japan and India leading losses. Stateside stock futures pointed to a lackluster open on Wall Street after the tech-heavy NASDAQ composite fell 2.47%, and that's its worst day since September. On the data front, November's Eurozone harmonized inflation figures due Friday morning. All right. Good morning, KD. Good morning, Peter. Nice to have everybody on the webinar. Peter just writing here, yesterday was a good sell-off day on the DAX and the NASDAQ 100. All right, let's bring up the charts and take a look. So just with regards to yesterday, it was a public holiday here in ZA, so I wasn't looking at the markets. I mean, I looked at them sort of in the morning and the evening, but wasn't following them throughout. Let's take a look and see. Let's take a look and see what is happening here. Let's go through the weekly. I want to use this one. Yeah, let's use this one. Yeah. Let's just get off all the. Let's just take all the line studies out. And before we sort of make any comment or sort of analysis on this as a sort of a whole, let's just take a look at this week's candle. So just taking a look at this week's candle, and of course it's just before the cash open, and it's just such an uncertain week. So let's just explain how I get that. So it's a spinning top with the obvious comment that it's not a completed candle yet. It's only going to complete after today's trading session, after market close today. But as it stands right now, it's a spinning top. So whilst there has been some bullish action, the bulls have been pushed back, and whilst there's been some bearish action, the bears have been pushed back. And we've got the small real body right here, and sort of relatively flat for the week so far. So that's the first comment. And then the second comment is it's also within last week's range, isn't it? Which is what we call an inside candle. In other words, this week's candle has got a lower high than last week, but it's also got a higher low than last week. So it's completely inside. It's in other words, bulls haven't had the power to take out last week's high. Bears haven't had the power to take out last week's low. So we just kind of almost treading water, so to speak. We had a really average week, I think, by sort of the single candlestick measure. Yeah, Katie's just asking if we can do NASDAQ and oil as well. Yeah, we certainly can. All right. So that's just kind of the immediate candlestick analysis. So it's been a week really of indecision. That's how we would define it right now. It may change. Maybe there's a spectacular day and there's a huge blue candle and we take out last week's high, but I mean that's a big it's a big if, right? So a very neutral, uncertain week. We've still got this underlying support. Okay, we've still got this underlying support underneath us, and I think the analysis when we bring in the support is, well, we've got this reference candle low that's off support. So this is nothing new. We've seen this in the last DAX open, where we said, look, we've got this reference candle. That's condition one. Condition two is price taking out the reference candle's high. Condition three is closing above the reference candle's high. But this week, no follow through. No follow through. So I think the logical evolution of the analysis is to say, okay, well, we've got this resistance here. How strong is it? Well, we'll see. But it's hit this now 2 weeks in a row and hasn't been able to really get through the resistance area, which is around about the 15,770 area, right? The reference candles are bullish reference candles. Another name for it is a swing low, which builds a platform for a potential swing, but it doesn't guarantee that swing. And of course, if price is not able to take out this resistance, then the obvious point to watch would be this point over here, because that would, if price closed below this point without making any more highs, this actually becomes a swing high point, and that becomes the bearish case, which I think would be a big knock in terms of market sentiment. It would be something like this. Like that. So you'd get kind of your lower peak, possibly into the lower trough. But again, that's just sort of a potential scenario. It's certainly not what's, we're not predicting that at all. We're not predicting anything. We are watching the market action. And if there is going to be some sort of bullish movement off of the swing low, price has to prove itself. That's right. How is it going to prove? Well, it needs to make a candle that has a higher low and a higher high. So let's just put this into perspective. Let's say this is a reference candle. Here's the confirmation of the reference candle. Well, higher lows and higher highs confirm that it's a swing low, because that's the swing, right? That's what's lacking here. So we've got the higher low, we don't have the higher high. See how each one of these candles, each one has a higher high and a higher low. Inside candle is not going to do it for us. So it's again, just to stress, an uncertain week. It's not a bearish week by any means, but it's certainly not a bullish week by any means. That is actually very clearly represented when we take a look at the daily chart, especially our zone analysis. So the zone analysis, the last time we spoke on Wednesday, the comment I believe was, look, as long as we stay in zone 2, the harder it is for us to trade this instrument, because zone 2 is neutral. It's trading a congestion, a consolidation area. It's much harder to trade consolidations than it is to trade trends. Trading trends doesn't mean, you know, there is a payoff, but if there is a sustained trend, it's generally easier. Let me just explain what I mean. So here's a big sell down over here. Let's just say you went short here because you're in zone 3. Well, clearly there's no payoff there because it's back in zone 2, and that's because there's no sustained movement in zone 3. So we're looking for these sustained moves. So here you can see there's a sustained move in zone 1. So that's an easier trend to trade than this one. So these big sell-offs, kind of make things very difficult. So it's these sustained kind of moves which are easier, but we don't have that. We've got a neutral movement sideways, and that neutral movement sideways is clearly seen on our weekly chart. Let's use this one, which has got an inside period, and it's clearly seen on our zone analysis, which is in zone 2. So it's not an easy chart to trade, in my opinion, and the reason is simply that the momentum's neutral. Okay, so the momentum's not going to take you up, or it's not going to take you down. And if we go through to the hourly here, let's take a look and see what's in the hourly. Okay, so yesterday, yesterday's a weekday, so there's some sort of selling, but sort of it takes place within this zone 2. So in other words, bulls try their hardest to push up here, and they get rejected. Okay, bulls try to push their hardest they try to push hard up, they get rejected. Bears try to push down here, they get rejected. So there's a real tug of war going on here between the bulls and the bears, and it's still going on. It hasn't resolved, and that makes this this instrument difficult to trade right now. If we take a look and see pre-market what's happening, well, it does look as if it's setting up for some sort of bullish action. You can see that the EMAs here are converging on one another. So if that convergence turns into a bullish cross, and if the stochastic turns into a bullish cross, those are triggers. Will they amount to a bullish swing? And of course, the answer is we don't know. But the key is it needs to get to a level in the stochastic that suggests there's some sort of momentum push. So here is a stochastic hanging out in the 80 area. Here's a nice momentum. So, and of course, even though there's a nice momentum push here, you know, it's still within the confines of that zone 2, which is neutral. So even though there is a nice sort of drawn out stochastic here in the 80, this move over here kind of loses its kind of becomes exhausted very quickly, doesn't it? And that's because of that tug of war that we're talking about, the tug of war in the daily chart. Katie's just asking if there's a correlation between the DAX and the S&P, and I would think there is. I would think, Katie, there's probably more of a correlation between the DAX and the Dow, because they seem to have, the Dow has more of a cyclical component to it, and the DAX is generally regarded as a cyclical index. The S&P has cyclical components in as well, but it's also, there's a lot of I mean, Tesla's a huge part of it, which I would suggest is more of a growth component than, say, a cyclical. So I would suggest, whilst there probably is some sort of correlation, I would think that the correlation is strong with the Dow. Let's just take a look at the S&P first. Okay, so it's a very similar hourly, a very similar daily over here, and a similar weekly. The weekly on the S&P is stronger. You can see why do I say it's stronger? It's just got that higher high and the higher low, which the DAX is lacking. Let's just see the US30. US30 is also slightly stronger because you can see it's got that higher high, higher low. The Dow is actually looking a little bit stronger. So there would be a correlation. In this case, it actually does look like the S&P is the more correlated of the two. But I would answer that in the affirmative. Just at the very least, they both sort of exposed to risk on sentiment. Let me know if that answers the question there, Katie. We'll have a quick look at the NASDAQ, then we'll do oil. All right, so let's go to this one over here. Just take out the indicators for now. This is a weaker looking chart. You can see that. Well, why do I say it's weaker? I say it's weaker because there's been a much bigger sell-off. So you've got this big, long red candle. It does have a higher low and a higher high, but this actually just kind of makes me nervous that there could be some weakness in the DAX here. I beg your pardon, weakness in the NASDAQ, I beg your pardon. It makes sense again. I think that because there's now been a actual clear sign that the rates are going to be hiked next year, I think that there is a real possibility, again, not a definite, but a real possibility that there is a reallocation of funds away from growth, and the NASDAQ's a growth stock, and I think if it goes away from growth, well, where's it going to be reallocated to? And I think cyclicals are going to be on the list of possible answers to that. So there is a good chance that the cyclicals outperform the growth. And what's interesting is that this has kind of been mentioned for the last year now. We've been talking about a potential reallocation, but we've never And we've never really seen it sort of the trend take off. We haven't seen the reallocation. There have been pockets where the cyclicals have outperformed, but it's the growth stocks have still been right up there. And I think now that the communication of 2 to 3, well, they say 3 rate hikes next year, growth stocks may be readjusting, and that's because of a reallocation. And the reason for that is what's called we call it the time value of money. The time value of money. In other words, when the analysts try and value stocks, they look at cash flows, and before looking at cash flows, they'll look at dividend payouts, because it's really the dividends that bring in the value on a discounted cash flow basis. And growth stocks delay dividends until they're more mature. So in other words, if they sort of stabilize, become mature, then they start distributing their profits to shareholders. But until then, they'll carry on reinvesting. In other words, it's going to take longer for them to pay out their distributions than already mature companies. So the key there is it's going to take longer. So we're talking about time here, time value of money. $1 today is worth more than $1 tomorrow, especially in this environment with inflation. Okay, so the further out a dividend payment is going to be, well, the less it's worth today when we discount it back to today. And the market knows that. So the fact that the discount rate, the interest rate starting to potentially be pushed up, I think that could lead to a reallocation of funds. And I think that's a theme that we're going to have to keep an eye on as we move into 2022. Let's just take a look at this. And you can see this is the relative weak index. It's in zone 3. Let's just take a look at oil in this environment with higher rates. Well, I'll start off with the weekly. I think this is a difficult chart to read. Let's go through to just the plain vanilla one for now. And I think KD, I think what we're going to be looking out for here is the reference candle to complete. So it hasn't completed yet. You can see it hasn't completed yet, and I think that's the challenge. I think that in this environment, oil is certainly a contender to be a performer, right? So it certainly needs to be on our watch list. The fact of the matter is we've got this big sell down. It might be representing pretty good value right now, considering this inflation environment. I think just to kind of cement that, we need to see the reference candle complete with conditions 1, 2, 3, and of course get the swing going, right? Higher highs, higher lows, higher lows, higher low. Yes, higher highs, higher lows. Yeah, and move from the neutral area back into the zone 1. And I think that oil has a cyclical component to it as well, just like the DAX does, just like the Dow does. And I think that all of those need to be watched. They all need to be on the watch list. And also the NASDAQ, because we'll see if the NASDAQ starts pushing into zone 3 and the others start pushing into zone 1. Well, there's that reallocation we're talking about. So we're not quite in the bullish area yet. We need to just keep an eye on that. I hope that helps, Katie. Let me know. If there are any other questions, please go ahead and type those through. All right, nothing else. So let's conclude here. And thank you for joining me this morning. And I'm going to put this onto Telegram and our Insights page in the next few minutes. Thanks very much, guys.